It's February 8th. JLD here, and welcome to MSTR Today and the Treasury Titans. Nothing in this video is financial advice, but Michael Saylor wants us to know that orange dots matter. What does that mean? Michael Saylor and Strategy bought more Bitcoin. Despite that really gross little drop you're seeing right there down to 60,000, Bitcoin's now back above 70,000, at least at the time of this recording. And Michael Saylor continues to buy Bitcoin. Can you say business as usual? I mean, after attending the earnings call, you can see nobody was fazed. People understand this is the life of a Bitcoiner. This is the life of a Bitcoin treasury company. This is the life of a holder of MSTR, the actual common stock. And guess what? We're going to make it. In my opinion, we are absolutely going to make it in such a big way. Why? Because orange dots matter. And Michael Saylor being laser focused on continuing to buy Bitcoin no matter what is brilliant. When he bought 87,000 and then the next week Bitcoin was down to 60,000, guess what? Does any of that matter when Bitcoin's $150,000, $250,000, $774,000 per Bitcoin? No, all of those buys are going to be amazing. Michael Saylor and his team do not time the markets. They don't trade the markets. They just buy Bitcoin when they have the funds available. End of story. Sometimes it works out, sometimes it doesn't. Guess what? That's the process. That's the system. That's the focus. That is the strategy. Let's keep on moving on to Michael Saylor, who posts digital credit outperforms conventional credit. That's STRC. And then he shows stretch tax equivalent yield to other credit instruments. Because again, tax equivalent. I mean, look at this. 17.9% is the tax equivalent to private credit, which is, of course, very risky. Junk bonds, nobody invests in these things. Really, the first thing that people actually invest in, I should say, are treasury bills. Treasury bills, money markets, and really bank accounts. So we're talking 14% more return. 14% if you invest in stretch and you believe in one thing, that Bitcoin is not going to zero. Because if Bitcoin is not going to zero, you're getting paid this every single month that you have money in stretch. If it goes to zero, then there's going to be some problems. Absolutely. End of story. Fong Li says, running strategy. Fong Li's jumping into the game. I like that he has 200,000 plus views in this. He's a CEO of Strategy. I want him to be out more in the public. He is getting out more in the public, as you saw yesterday. Excuse me. He posted that 6-minute clip on, I think it was CNBC, just kind of laying the groundwork of what 2026 is going to look like for Strategy, which, by the way, hint, it means buying more Bitcoin. Hint, it means getting stretched to $100 and then ATMing its face off every single day that he's able to do just that. So here we have, excuse me, Fong Li running Strategy. That's what he's doing. Guess what? Michael Saylor's running Bitcoin. Fong Li's running Strategy. Adam Livingston says, they're just selling shares to buy Bitcoin. Of course, he's saying what bears are saying, what fudders are saying, what the clueless are saying. And he says, yes, that is literally the point. That's like standing outside a bakery screaming, they're just mixing flour to make bread, like you uncovered Watergate. MSTR is securitizing Bitcoin accumulation with corporate rails. The skeptics hear that and start shadowboxing with imaginary fraud because reading is harder than coping. And that's what they're doing. They're all just reading, and they're reading incompetent, clueless other individuals, and then they're parroting that. I love this post by Jackson Fairbanks about how digital credit volume's up 41%. This is the second largest week ever. It's accelerating. Look at this insanity. I just love seeing Stretch having so much high volume. I mean, absolutely amazing, because guess what? Digital credit, it's inevitable. Rohan says, volatility creates attention. Attention creates curiosity. Curiosity forces understanding. Understanding creates conviction. Conviction creates adoption. Which part are you at? Are you just at the attention phase because of the volatility? Are you in the curiosity phase? Are you in the understanding phase? Are you in the conviction phase? Or are you in the adoption phase? I mean, I am well past the adoption phase because I continue to adopt more strategy into my bank account every single trading day. Zink says, being bullish on Bitcoin but bearish on MSTR remains the most fascinating example of cognitive dissonance I've ever seen. Some tell you Bitcoin is going to 1 million while saying that Saylor is going to fail. They are wrong. Strategy will be a $10 trillion company. I could not agree more. And by the way, let's go. This is in response to Michael Saylor saying, what skeptics of Strategy miss is that digital capital, Bitcoin, outperforms physical capital. Digital credit, Stretch, outperforms conventional credits. Amplified Bitcoin, MSTR, outperforms wrapped Bitcoin. We talked about this yesterday, but worth another mention. Chris says, as an investor, if you're not willing to be literally the only person on earth that believes in your thesis, then the game is not for you, because there are going to be periods when it feels like you're the only person on earth that believes in your thesis. And guess what? I am here to be that other person for many of you. For many of you that believe in MSTR, but every now and then your belief is wavering. This is why this show exists. So thank you for your likes. Thank you for your comments. Let me know in the comment section, do you believe? Is this show something that brings you just some kind of value, some kind of benefit? I would love to hear that in the comment section. Your comments truly mean a lot. Mark says, MSTR ran the common ATM aggressively. Bitcoin crashed at MNAV, never fell below 1x. In fact, MNAV has trended higher, ending the week at 1.18. If Bitcoin has indeed bottomed, then the reflexive nature of MSTR strategy should drive MNAV significantly higher as Bitcoin recovers, in my view. And that's Mark's view. Chris says, most don't understand this yet is one of the most important ideas to grasp. The Bitcoin supply is fixed. Theoretically, the maximum amount of Bitcoin you could own is 21 million. That means the Bitcoin yield comes with diminishing returns because each additional Bitcoin contributes less to Bitcoin per share. That means you only get one chance to generate Bitcoin yield with every Bitcoin purchase. So you want to maximize the ROI of every Bitcoin purchase. Every Bitcoin purchase below maximum accretion levels is a permanently suboptimal allocation of capital. This is why the focus for strategy now needs to be on building demand for stretch to buy Bitcoin and not issuing shares at 1 MNAV to buy Bitcoin, which of course now luckily they're at 1.2 MNAV. So fire away, Saylor, buy away. And we have a great video clip of Michael Saylor coming up as soon as we get back from thanking our sponsors. When you want more, start your business with Northwest Registered Agent and get access to thousands of free guides, tools, and legal forms to help you launch and protect your business all in one place. Build your complete business identity with Northwest today. Northwest Registered Agent has been helping small business owners and entrepreneurs launch and grow businesses for nearly 30 years. They are the largest registered agent and LLC service in the U.S. with over 1,500 corporate guides, real people who know your local laws and can help you in your business every step of the way. Build your business identity fast with resources, forms, and step-by-step guides even before creating an account. Sign up to manage your business hub with lawyer-drafted documents. Northwest is your one-stop resource, makes life easy, and keeps privacy automatic, never selling data anywhere. Don't wait. Protect your privacy, build your brand, and get your complete business identity in just 10 clicks and 10 minutes. Visit www.northwestregisteredagent.com/JLD free and start building something amazing. Get more with Northwest Registered Agent at www.northwestregisteredagent.com/JLD free. Scams and identity theft do not start with hackers. They start with your personal data being easy to find online. Your home address, phone number, and employment history can be sitting on dozens of websites right now, waiting to be used for fake loans, targeted scams, or worse. That information is spread across people's search pages, shady directories, and commercial databases you've never even heard of. That's where Incogni comes in. Instead of spending hundreds of hours manually opting out of these sites, Incogni automates the entire process. They hunt down your data and demand its removal. Incogni doesn't just do this once. They continuously monitor these sites in the background to make sure your data doesn't reappear. I recommend the unlimited plan because when something isn't covered automatically, Incogni's custom removals feature lets you send in a specific link and a dedicated privacy expert takes care of the manual removal for you, start to finish. Remember, if they can't find you, they can't use your data against you. Take your data back risk-free with Incogni's 30-day money-back guarantee. Use code MSTR for 60% off an annual plan at incogni.com/MSTR. That's INCOGNI.com/MSTR.
And then I have a CAD CAM system and a computer generated machining, a machine that's computer controlled, so I can operate the lathe and I can chip out anything I want from that block of plastic. So I put in whatever my image is, I unleash the computerized machine, and I get out some beautiful sculpture, right? Not quite 3D printing, but something like that. I'm converting a block of raw material into something, a beautiful work of art. And of course, what does the person want to see? How many different types of sculptures? There's infinite types of sculptures, and they're all just coming from a single block of some kind of acrylic or plastic. Now, I think about digital capital. It's like you have a bunch of digital capital. You have $1 billion of Bitcoin on your balance sheet. You can carve out any digital credit instrument you want, right? And credit instruments are very, what's the degree of collateralization? Is it 10x over collateralized? What's the degree of liquidity? What's the credit guarantee? Can I get my money back in a year, in a decade, in a century? Is it perpetual? What kind of yield does it give me? What's the yield curve? Is it high duration yield? Here's the magic trick, right? You're a Japanese company. You want to create 5% yen, 5% yield in yen forever. How do I create that, right? Is there a market for that? Yes, there's like trillions of dollars of money markets in yen that get 50 basis points. So if I can carve out 500 basis points and I create this currency, I'm going to take the currency risk of the yen. I'm going to create this yield. I'm going to actually create duration forever. And what's the collateralization? Do you want 10 over collateralized or 5 or 2? What kind of credit risk is going to be embedded in this instrument? I can actually sell you that instrument and I can collateralize it 27-1. I can collateralize it 20-7-1 and give you a credit put, every 3 years, and I can completely change the nature of the credit. Or I can collateralize it 2-for-1. I can create sub-junk yield, right? And I can give you a different instrument. So when it comes to credit, you've got all sorts of investors. The Russians don't want US credit. The Chinese don't want US credit. The Japanese don't want US credit. The Canadians, the Europeans, they don't want to take credit. They don't take currency risk. So you can create a credit instrument, if you're a Bitcoin treasury company, in any currency, with any degree of duration, with any degree of collateralization, with any degree of volatility. I talked to a guy probably richer than everybody in this room, and he's got a bit of Bitcoin, and someone says, well, why do you only have like 1-2% of your portfolio in Bitcoin? He says, well, frankly, I'm like something years old, and I can't handle the vol. Okay, 75-year-old, 80-year-old guy with a lot of money, he just doesn't want a 50 vol, 50 ARR instrument that you have to hold for, if you call it indefinite duration, in theory, it's 120 months. So if you're willing to hold this thing for 10 years, somewhere between 120 and 240 months, I'm pretty confident you get yourself like 30% a year ARR. But when you're 92 years old, who wants to actually hold something for the next 25 years? They don't want it. And so there are a lot of people, there are very wealthy pockets, and they can't stand the duration. They can't handle the volatility. Another example of people can't take the vol, corporate treasurer. You've got a Bitcoin company, you believe in Bitcoin, but you got to make payroll and you need to make your rent. And so you have working capital. Conventional wisdom is keep 1 year of working capital into the currency that your liabilities are denominated in. That's your treasury. What's the second best? There is no second best.